So my name is Sharita Gardner and I am with MobilOil Credit Union. I'm sure you all have probably seen one of our credit unions around town. We now have 10 locations, 4 here in Beaumont. We are in Mid-County, Silsbee, Lumberton. We serve 8 counties. And the majority of what I do is I go around and I talk to people about money and their finances. I'm in the marketing department. My title is Business Development Representative, and majority of the day I'm either at events and I'm just talking to people casually about their finances, or I'm in a seminar setting like this speaking to people a little more formally about their finances, even though when I'm doing a setting like this I like to keep it informal. So if you all have questions, testimonies, anything like that, feel free, just raise your hand and we'll just get you in the seminar like you're up here with me. And so I'm going to be talking to you guys a little bit about credit score. And credit score is one of the things that I'm most passionate about. I heard some of you kind of talking earlier, and I heard people discussing their credit scores, whether they were good, not so good, and I was pretty impressed. And so thinking about credit score, it is a conversation that we typically don't have in our household when we're in school, right? When we're in high school. And we take classes like economics and we're talking about finances for the government or our state as a whole. And we may not necessarily be talking about the finances in our household in particular. So today we're going to just break down the basics of credit score. All of you have a blue notebook, and that is just a notebook where you can take notes in there, use it for later, do whatever you want. But I also have a pamphlet in there, and it's called the Credit Matter Guide. So no worries. If you don't remember anything I say today, all of the information is in that Credit Matter Guide. I've been in college too. I know 2 days or 2 weeks later, you're like, man, I remember that lady said something, but you have no idea. So all of the information you can reference back in that guide. If you didn't grab one, they're here for you to take on your way out. And we're going to go ahead and get started and jump right into it. First question I like to ask, do you guys know the #1 stressor for adults in America? Somebody over here said it. I heard credit score, I heard finances, I heard money. The #1 stressor for adults in America is money. You all know the #1 reason for divorce? Money. So money pretty much affects every aspect of our lives. It is something that we have to have, and I always tell people, it's not about how much money you make, it's about what you do with your money. And although money affects every aspect of our lives, it's not like, if I'm not a millionaire, I'm not going to be able to make it. You know, we know that's not the case. So today we're going to be talking about what it does take to make it when it comes to your credit score, and how your credit score ultimately affects your pocket and how much money you're spending. So you all are here because you are trying to get an education to eventually get a job, right? And you're trying to make money to be able to support your family, your household, whatever it is you want to do, other endeavors as well. So today I'm going to tell you guys why credit score is so important when it comes to you getting that perfect job and being able to buy and do whatever you want. The way we started this program at MobilOil Credit Union was about 7 years ago. I've only been at the credit union about 2 years now, but about 7 years ago we had members and they were coming in to get loans for various reasons, whether it be a car loan, a home loan, student loans, a credit card, and some of our members were not always in a place where we could give them a loan at the best rate. They either needed a cosigner, or they were going to pay a higher interest rate, or we had to deny them altogether. So we thought, why wait until our members come to us and get declined for loans? Why aren't we going out into the community and providing a service to our members where we can assist them with their credit score so when they come in, they're already ready? So first step was we started emailing all of our members every birthday, once a year, and it's just like, hey, come in for a free credit score analysis. And our credit score analysis can be done for members and non-members. You come into the credit union, you tell them, hey, I want to know what my credit score is. And I want a 6-month plan and a 1-year plan on how I can raise my credit score. And we do that for free for all of our members and non-members. And you do not lose any points when it comes to inquiries. And we'll talk a little bit more about inquiries later. So instead of waiting until our members to come to us to get declined, we started going out in our communities and providing this service for our members. I go to high schools and speak with seniors because what are they going to be doing? They're going to be going to college and probably buying their first car, getting student loans, or being approached by a credit card lender, right? So I want them to be ready when they're 18. And our seniors are in high school, they're 18 and they're already receiving pre-approved credit card applications and things of that sort. So it's kind of like if you're 25, 30 and you're just learning about credit, and I was kind of in that boat. Sometimes you're like, man, I wish I would have had this 10 years ago. So in addition to me going to high schools, I also go to college campuses, I go to businesses, and I speak to employees, and their employers bring me in, because if you are healthy when it comes to your finances, you're going to be overall healthier in general. So when we are talking about credit score, you may have heard some people mention a FICO score. And today we're going to be talking about what a credit score is, what can impact your credit score, what's going to make it go up or down, and what lenders like me are looking at. And if you've heard somebody mention a FICO score or talking about FICO, FICO is just an acronym, and it stands for the Fair Isaacs Corporation, and they are basically the ones who created the scoring module that we all use here in America to create your 3-digit credit score. So that's simply what FICO is. So if you are coming into the credit union, what's your name? Aurelie. She comes into the credit union and she says, you know what, Sharita, I have a new job and I'm making probably $3,000 every 2 weeks. And she has her paycheck in front of her, and I can see her paycheck, and she has a $3,000 paycheck. So I would love to give Aurelie this car, and from looking at her paycheck, it looks like she may be able to afford it. But do I know what else she has to pay for out of her paycheck? No. Do I know if she's had a car before and her payment history with that car? No. So even though I'm able to verify her funds, lenders are looking at your 3-digit credit score because it's basically going to tell me how financially responsible you are. If I look at your credit score and it's low, that's going to tell me you may not be paying some people on time. So I don't know if you're going to pay me on time. So to me, you're going to be a higher risk. So I'm going to give you a car loan. I'm going to give you a home loan or a credit card, but it's going to be at a higher interest rate, and that means you're going to spend more money out of pocket. So your credit score ranges from a 300 to 850. Anybody want to take a guess at what's about the average credit score in America?
650, 620.
What'd you say?
I said 590.
590. What'd you say, sir?
Lower than 600.
Lower than 600? 600? What do you think?
Like 450.
450? Man, you're not giving these people any credit. So the average credit score in America in 2016 was a 711. The average credit score in America in 2017 was a 689. And we are seeing those numbers descend just a little bit every year. Do you all know what it's due to?
Trump.
No, a little bit before he came into office. What are y'all here doing? What are most people acquiring their largest debt right after high school? Student loans. Student loans. So it is very, very important once you embark upon those student loans, you kind of know what you're doing. And that's why I was saying we may not be at the point where we're 18 and we're going to buy a house, we're going to buy a car. We may not be at the point where we are, going to make a large purchase or get credit cards, but we all are going to do something after high school. And it's probably going to be college, it may be the military. Well, if you're going to the military, you're still going to be receiving a paycheck, so you're going to have an income, and you still have to live, so you're going to have expenses. So it doesn't matter if you are going into the workforce, if you're going to college, or if you're going to a higher level of education, or if you're just going to work. There are going to be expenses, and you probably are going to have an income, and you're going to have to figure out both of those and how they're going to relate to your credit score. So 850 being the highest, and the higher your credit score is, the more lenders are going to trust you and the lower your interest rate's going to be. And that means the more money you're going to save out of pocket. Because interest is something that you're going to pay back, right? But am I going to pay a high interest or a low interest? That's what we are going to decide. Your credit score is going to be a reflection of the last 24 months, the last 2 years of your financial responsibilities. Now, don't get me wrong, if I pull your credit report, I can see anything you've ever done. So it's going to be your first line of credit, whether you were 18 or whether you were 25 or 30. Whatever that first line of credit is that you open, I'll be able to see that. Any lender will be able to see that, and we'll be able to see everything you've ever done. But your actual 3-digit credit score, that 3-digit number, that's going to be calculated based on what you've done in the last 2 years, in the last 24 months. So I always tell people, if you're a senior in college and you're about to graduate, or if you're going to school for 2 years and you're about to graduate, it's really important for you to watch what you're doing when it comes to your finances in those 2 years, because that could possibly affect you after you get out of school when you're looking for a job. And we'll talk about some ways that your credit score can affect you when it comes to employment, when it comes to your deposits and things of that sort. You guys have any questions thus far? Are you following me? All right, sounds like we're doing good. So your credit score, like I said, is a reflection of the last 2 years, and I always like to tell people it is a snapshot. And just like some of our social media outlets like Snapchat, your post only lasts 24 hours, it's kind of the same thing with your credit score. It is going to be a reflection of the last 24 months, and it can change from day to day. So it is literally just a snapshot. And the reason your credit score can change from day to day is because lenders, that's anybody you borrow money from, whether it be a credit card company, whether it be someone you get student loans from, a car, a home, we're all considered lenders. And lenders report to the credit bureaus every month. The 3 big guys are TransUnion, Equifax, and Experian. But who's to say that if you have a car with MobilOil credit union, that I'm going to report your loan payment the same day as if you had a home loan with Do Good? So I may report on the 1st, and Do Good may report on the 15th. So if you look at your credit score on the 1st, it can be completely different than it is on the 15th, just due to the fact that your lenders are reporting at different times of the month. So sometimes people will tell me, you know what, I don't really make a lot of money, so I know I don't have a good credit score. But they don't know exactly what their credit score is because they haven't looked it up. You all do know that the amount of money you make, your title at work, where you live, it doesn't matter if you're a company owner, none of those things are factored into your credit score. It doesn't matter if you make $8.50 an hour or you make $800,000 a year. I have seen 2 individuals come into the credit union with very different financial circumstances, and you would think those financial circumstances would affect the outcome of their credit score, but let me tell you the scenario. So I had a girl come in, she's working at Taco Bell, she's going to Lamar, she's in her 3rd year of college, and she's trying to graduate and go to law school. She has maybe 4 lines of credit open, a credit card, she has a car, she has student loans, and maybe another small personal loan. She makes about $8.50 an hour, and she has been since she graduated from college, right? Or since she graduated from high school, I'm sorry. And she comes into the credit union, and she has a stellar credit score. She has over an 800 credit score. And then I also see somebody who comes into the credit union. They make over $100,000 a year. They're a plant manager at ExxonMobil, right? And they're in their 40s, and their credit score is a 550. And it doesn't matter where you work, what your title is, how much money you make. It's all about how you're taking care of your financial responsibilities. You can be the president of the United States, and if Trump is taking out a lot of loans, not paying them back, making late payments, he's going to have a bad credit score. It doesn't really matter your title or where you work. So it's very important for us to remember that, because that's good news for all of us, because we can all get back on track. And just like I said, your credit score is a reflection of the last 2 years. People always will ask me if they have a lower credit score, can I raise my credit score in a year? And I'm like, well, did it go down in a year? Usually the same amount of time it takes your credit score to descend, to go down, is going to be the same amount of time you have to give yourself to bring it back up. It's not going to be like you spent 3 years in college and you charged spring break trips and you had a lot of fun, and in 6 months you're going to be able to bring it back to where it is. It doesn't really work like that. And so it's kind of like the old saying where your parents used to say it's really easy to get into trouble, but it's kind of a little harder sometimes to get out of it. It's the same thing with your credit scores. So I'm talking to you guys about why it's important for your credit scores to be high and how all of these things affect you. But here is a list of exactly some ways that our credit score can affect us. So we said the higher your credit score is, the lower your interest rates are going to be. And that means the less money you're spending out of pocket. That's a good thing. If you are going into the dealership to go buy a car, if you've ever bought a car before, you know you're usually in there an hour or more. It's a lengthy process. Well, if you go to your credit union or your bank, whatever your financial institution is first, and you get a pre-approval letter, it definitely speeds up the process when you're going to do a credit transaction. Not only that, y'all are FA the age where you're probably maybe living on campus, you could be living with your parents, some of you living on your own. So think about this, you go to move out of your parents' house and you want to go get an apartment. And usually we know that when we're looking for an apartment or a home, we have to go through an application process and they're going to look at our credit. But I never knew that even getting my utilities turned on, having to call the city of Beaumont for water, having to call Energy to get my lights turned on, that I had to pay a deposit for these utilities and that my deposit was going to be contingent upon my credit score. So Energy says, yes, Sharia, we can turn on your lights. But am I going to have a $100 deposit or am I going to have a $500 deposit? That's going to be contingent upon your credit score. If you are going to get a credit card, an auto loan, a home loan, all of those things are going to be contingent upon your credit score, and you're going to pay accordingly when it comes to your interest. What about car insurance? Everybody in here drives, right? Everybody pretty much drives, and I never knew that my car insurance premium was also based on my credit score. My home insurance, if you're buying, that's going to be contingent upon your credit score. So if your car is in your parents' name, whatever you're paying monthly for your insurance premium is going to be contingent upon their credit score. And that is one of the things that I know affects us all and earlier on, because we all are driving, right? And so do I want to pay $100 a month for car insurance, or do I want to pay $400 a month for car insurance? There are some other things that come into play, like tickets and your driver's record. But first and foremost, when the insurance carrier is asking you for your name and your social and all your information, they're running your credit first. Last but not least, getting a job. More and more employers are starting to ask you if they can run your credit as a prerequisite before they hire you. So, did you guys know that? Did you know that? No? Did you know that? Yes. So, I was curious when I got this job at the credit union. Before I was at the credit union, I came from a nonprofit. So, I came from the Chamber of Commerce, right? And I had other jobs in corporate America prior to that. And no one had ever asked to run my credit. They send you something via email, or they give you a call, and your paperwork says, can we do a background check? I'm like, sure, that's normal. Can we do a drug screening? Sure, that's normal. But then when they go, can we run your credit? I'm like, that's not normal. And what type of credit score do I have to get this job is what I'm thinking. I'm thinking, I'm probably not going to get this job. So I send all of my information, and I go to do my last interview, turn in all my paperwork, and I see a lot of young professionals working at the credit union. And I'm thinking, well, if these young professionals are working at the credit union, they may not have an 850 credit score. So what are these employers looking for? Mobile contacts me, they tell me you have the job. I immediately know they're not looking for a perfect credit score after that, after I got the job, right? So I'm thinking, what are they looking for? And now I go to a lot of job fairs, and I'll walk around and I'll ask all of these companies, do you all check credit before you hire? And most of them are saying yes. So it doesn't matter if you want to work at Baptist or Christus Hospital in medical billing and records, or if you want to be the lead RN. Hospitals now are checking credit scores. Financial institutions are checking credit scores. The other day I went to do a seminar at JK Chevrolet, right? You're selling cars. They are checking credit scores. A lot of sales positions are checking credit scores. I know for sure ExxonMobil, Motiva, and a lot of the plants check credit scores. So it seems like more and more employers, first responders, they check your credit score. If you want to be a cop, an EMS driver, any of that. So it's kind of not industry specific like I thought. Maybe it's just because I'm in the finance industry. It's not industry specific. It's going to be more and more common for that to be a typical thing on your application. Can we check your credit score? And they're going to be looking at that and hiring accordingly, right? And so I figured out what they're looking at your credit score for is they're trying to see how financially responsible you are, because it may in turn tell them how responsible you're going to be as an employee. So I have a credit card at the credit union because I go buy donuts or I'll go buy lunch if I do seminars for people. And I can imagine if Mobile would have pulled my credit. I had 4 credit cards. They were all maxed out. I never made any of the payments on time. I don't think they would have trusted me to give me a company credit card, right? If you are going to be working for ExxonMobil and you are the scheduler, and there's a person that tracks timing and does all the scheduling for the turnarounds, and you have a vehicle and you've been late the last 6 months on that vehicle, they're probably thinking, well, if they can't make these payments on their car, they may not have transportation. And how are they gonna get back and forth to work? And if you can't make your payments on time for your bills, are you gonna show up to work on time? And you're making the schedule for everybody in this multi-billion-dollar company. So I think it's basically just telling our employees, or our employers rather, how financially responsible we are, and like I said, that can in turn kind of be a reflection of how responsible we're gonna be when it comes to our job and our responsibilities at work. So if you're qualified for the job, you went to school, you know you're gonna nail the interview, you definitely wouldn't want something like your credit score to deter you from getting that job. So in telling you all of this, I know you guys want to know what makes up the credit score, right? How do I get that 800? There are 5 parts that make up your credit score. So I always tell people it's really simple, not always easy, but it's really simple to grasp the concept of where that 3-digit number is coming from. So the largest portion of your credit score, which is 35%, is going to be payment history. Paying your bills every time on time. Somebody take a guess. If you are 1 month late on your car payment, how many points do you think you lose on your credit score? Remember, we're working from a 300 to an 850 scale. 50?
20.
20?
It's
30?
35% of the dollar amount probably.
35% of a dollar amount probably. Who over here said 50 points? You're very close. 60 points. 1 month late on your car payment, you lose 60 points on your credit score. If you're at a 790, that is going to be a major drop. And if you're at a 600, that is a major drop to lose 60 points. Doesn't matter where you're at in your credit score. If you lose 60 points, that's a major drop. Even if you bring that payment current, you pay the bill, bring it current, you only get 40 of those points back. So you do not get all of your points back, and that's what I feel impacts people the most. Most of our young professionals, our young adults, don't have 5 credit cards, right? But we do have payments and responsibilities. So usually when I ask a young professional what their credit score is and they tell me, oh my gosh, it's so low, the first question I ask them is, do you have a credit card? And usually they'll say no, or they'll have 1 credit card. I'll automatically know payment history is what's affecting them because that's the largest portion of your credit score. And so I'm going to give you a t-shirt, but I can't throw that far, so I'm going to try. I knew I was going to fall short. I'm so sorry. So 35% makes up your payment history, and the next largest portion is going to be your amount owed. And when FICO is talking about amount owed, they're actually talking about what you owe on your credit cards. So they're talking about your credit card capacity. We have to maintain a healthy credit card capacity, and here's how you figure out your credit card capacity. Doesn't matter if you have 1 credit card or if you have 10 credit cards. You're going to add up all of your credit card limits. The most you can spend on those cards, the most you can max them out for. So say, for instance, all of my credit card limits add up to $1,000. We're going to keep it real simple math, right? All of my credit card limits add up to $1,000. Then I want to add up all of my credit card balances. That's what I owe, that's what I've spent, what I've swiped my cards for, and how much I need to pay back. So say, for instance, all of my credit card balances are going to add up to $500. So my balances are $500, my limits are $1,000. How much of my credit card capacity have I used?
50%.
50%. FICO says that's too high, and you lose points every month if you carry over a balance of 30% or higher. So when it comes to your credit card capacity, you want to keep your balances at 30% or lower. So it doesn't matter if I have 1 card or 10. If all of my limits were $1,000, then I need those balances at $300 or less, because we're going to lose half a point for every dollar we carry over, or for every point we carry over as far as capacity. So if your credit card limits are $10,000, you need your balances to be on the 2,000 end, because that's going to be the percentage you want to stay in. 30% or lower, FICO says is healthy. Over 30%, FICO says that's no longer healthy, and we're living off of our credit cards as opposed to using them to create positive credit history. The last 3 portions of your credit card, of your credit score are going to be length of credit history, being 15%. That's going to be your longevity. So it's kind of like you're going to go to college. What are they going to want to see? They want to see your high school transcript. Well, it's the same thing when you come into the credit union. You want to buy a car. I want to see your financial transcript. I want to see how you've paid other people and how long you've had those payments. And that's going to tell me, well, even though her credit score may not be where, where she wants it to be right now, she's had 3 cars, and every single one of those cars she's paid on time every month. That's going to give me a little bit of leniency, no matter what your credit score is, to be able to help you get that car and maybe at a better rate based on your length of credit history with those car notes. Last 2 portions are going to be new credit and a mix of credit. So when we're talking about a mix of credit, there is a revolving line of credit, like a credit card, right? You charge a credit card, you pay it off, it replenishes the limit every time, and you can have a credit card for 30 years. And an installment line of credit would be like a car. There is a certain amount you owe on this car, you're going to pay it off over a certain amount of time, and you're going to pay a certain amount every month based on what you want. So you can pay it for 6 years, 5 years, 4 years. And once you get to the end of your term, that line of credit closes out and it's paid off. So that is going to be a mix of credit, having installment loans and revolving lines of credit. So car, credit card, things of that sort. FICO also wants us to open new lines of credit. And they say no more than 3 lines of credit a year. 3 lines of credit is a lot for me in a year, so I would say do whatever you think is financially safe for your household. I can't afford to get a car, a credit card, and a home loan all in 1 year. That's a bit much for me, especially because you lose points when you initially open those lines of credit, and those are called inquiries, and we'll talk a little bit about that. So this next slide goes into the 5 parts of your credit a little bit more. Remember, 35% being payment history. I can't stress enough how important it is to make those payments every month, on time, every time. We were talking about a car payment, and if you would miss 1 month, losing 60 points, it's even more with the mortgage. I think a mortgage is about 90 to 120 points for being 1 month late. So, and you bring it current, you're not going to get all 90 of your points back. So it is very, very important to pay on time, have no delinquencies, no past dues. What else? When you're paying past dues, now you're paying a late fee. So not only are you going to be paying whatever that monthly payment is, interest, and now a late fee as well, that's extra money you can be keeping in your pocket. And I always tell people when it comes to payments, I just always pay 2 days early. That way I'm never late. 2 days early equals on time in my book, because with the credit card companies and some different companies, you never know when the cutoff time is. I know like Visa and some different major credit card companies, their cutoff time is like 12 noon. Or where am I at 12 noon? I'm here, or I'm thinking about what I'm going to have for lunch. And I may not necessarily be at my computer all the time and able to make that payment. So I just always make the payment 2 days early, so I'm never late. Credit card capacity, or the amount you owe on the credit card, keeping that credit card capacity at 30% or lower, because that's the next largest portion of your credit score. So if all of your credit cards are maxed out every month and you're paying that minimum payment amount, you're losing points every month and you're accumulating interest over time that you do not want to have to pay. Now, credit cards are a tool. I always tell people, because I think once I go and I talk to high school students or people who don't have credit cards in general, they always think, man, credit cards seem very, very negative. And, it has a bad spin on it. And if I can't afford it, maybe I don't need a credit card. Well, credit cards are a tool, just like a hammer. They can be used to build your credit score up really quickly, or they can tear it down really quickly. So if you get a credit card and the limit is $1,000 and you charge $1,000 that month and you pay it off in full, you're absolutely fine. You don't have to pay interest. You don't have to pay late fees. But if you get a credit card and the limit is $1,000 and you're only able to pay back $200 and you carry over that $800 balance, that's when it's affecting you. That's when you're losing points, and that's when you're going to be paying interest and or late fees. So it's very important that if we're going to get credit cards, we just know what we're doing. And the more knowledgeable about it, then the more educated decisions you'll be able to make. So credit cards aren't necessarily a bad thing, but you want to be able to pay it off everything you charge that month. And if you can't pay it off in full, you want to be able to pay it at least down to 10, 20, or 30% max. The last 3 portions, like I said, 15%. Being your oldest trade line and keeping that oldest trade line open. So sometimes people will ask me, do I lose points for closing out credit cards? I have multiple credit cards and I want to close out one. Not necessarily. You could if it affects your credit card capacity. So if you have 15 credit cards and you're closing out the very first credit card you ever had, and all 15 of your credit cards, all of those limits add up to $10,000, right? And that one credit card that you want to close out is your very first one, and maybe the limit on that is $5,000. That's going to affect your credit card capacity, and that's going to affect the oldest trade line you have open. So yes, it can affect your credit score. But if you're going to close out a credit card, it has zero balance, the limits aren't affecting your capacity, then you're fine. It's not going to hurt you to close out a credit card. Those last two portions, like I said, being 10% both with a mix of credit, having a revolving line of credit, an installment line of credit, and maybe a mortgage as well. The last being 10% is opening new trade lines. So you'll go into the mall, you put your stuff on the counter at JCPenney's or Dillard's, and there's a lot of stores that you go into. You put your stuff on the counter, and they're like, how would you like to save 15 or 20% on your purchase today? Have y'all ever had them ask you that? What do you think they're trying to do? They're trying to get you to sign up for a credit card. And I'm happy that you all are aware of that, because I have been to some classes here and students don't necessarily know that, because they don't necessarily always say, how would you like to sign up for a credit card today? And that always makes me a little leery that they always sugarcoat it. And it's like, how would you like to sign up for our rewards card today, for our Platinum Plus card, for our Members Perk card? And I'm just like, at HEB, I have a HEB Plus card or whatever, a Member Perks card, but they only ask me for my name and phone number. At Dillard's, they want your name and your social security number. And anytime you give your social security number, hands down, doesn't matter if it's retail or if you're going to maybe look at furniture, anything like that, if you give them your name and your social, they are running your credit. There's no reason anybody would need your social security number if they're not running your credit. Here's a little plug, just because it's January, and I know people are filling out FAFSA this time of month, this time of year. I know you all are filling out your income tax this time of year and things of that sort. Your social security number is the thing that you want to keep and not give anybody unsolicited. When I say unsolicited, that's somebody contacting you via phone, via email, on campus, anything. If they are contacting you and that's not a service or a product you're going to look for, it's unsolicited. And if you're giving them your name and your social security number, that is the easiest way for somebody to commit identity theft. And all I need is your name and your social security number and one other identifying factor, and I can get online and I can apply for a credit card. I can get online and I can apply for a personal loan. I can get online and apply for a mortgage if I wanted to, if I had your name and your social security number. And that third identifying factor, I bet you I can find on your social media, because I bet you have your birthday on your social media. Sometimes people take pictures, and they're taking pictures in front of their house because they've just planted their new garden or whatever it is, and they never notice that their address is on the house. And I don't really have to look up your neighborhood, because that little location at the bottom, I could just click on it. And you'll know that Snapchat, if you have your locations on, I can see where you're at on campus right now and exactly what room you're in. So y'all have your locations off when it comes to Snapchat, right? I hope so. How many of you have your social security cards on you right now? That's awesome. Not one person. Usually I go and I talk to people and they have their social security cards in their purse. And if you have your social security card in your purse, take it out. That's not something you need on an everyday basis. And think about it. You only need your social the first day of work, if you're going to register for school, something like that. But you're not using that every day on a daily basis. And so you don't want to keep that in your phone wallet slot, or you don't want to keep that in your purse, because that's all somebody needs to open up lines of credit and do other things. All right, let's get back on track from identity theft. So you go into the store, they ask for your name and your social when you put your stuff on your counter, and they're like, how would you like to save 15 or 20% today? And you're like, yeah, because I want to save money, and this may be a good option for me. I always tell people, ask them more information if you are interested in getting a credit card there. Because I'm just always curious, and the other day I happened to go to Dillard's, and they said, how would you like to sign up for a credit card today? No, thank you, but I'm curious, what's your interest rate right now? And whatever they advertise for their interest rates, it's going to be for somebody who has an 850. Because when it comes to a credit score, that scale being 300 to 850, when we look at that on paper as lenders, we're looking at it like a grading scale. So an 850 is going to be an A++. At 800, it's going to be an A+. A little bit under 800 is going to be an A, and that's kind of how it's ranked, right? So sometimes people will also ask me, what if I have no credit? People say no credit is worse than bad credit. No credit on paper is about a C. And so it's not terrible, but you're not going to get the best rate, but it's going to be somewhere in between. And I've also had people ask, well, do we start at a 300 and work our way up? Do we start at an 850 and work our way down? If you're 18 or 17, you have no credit. Even if you're 18, you have no credit if you've not opened a line of credit. You could be 25. If you've never opened a line of credit, that you're not going to have a credit score populating. When you go to open your first line of credit, whether it be a car, a credit card, a home, whatever it is, that's when you populate a 3-digit credit score. So do you think you start at a 300 and you work your way up? Do you start at 850 and you work your way down? How does that go? Start somewhere in between.
No, I think it'd be fair if they start you at the top because you haven't really done anything.
Start you at the top and work your way down. So usually if people say they have a 500, it's because they've made all the wrong decisions and it's brought them all the way down.
I guess,
Yeah. Anybody else? Where do you think? Start at the bottom, top?
In the middle.
In the middle? 500, 550. You want a t-shirt or a hat? A t-shirt? Do you want a t-shirt or a hat?
A t-shirt.
A t-shirt? Oh, I'm getting better. Not really, she's just closer. So, you actually start somewhere in the middle. Everybody starts out with good credit. It's going to be contingent upon what you do. That's going to affect whether your credit score is going to go up or down, right? So I have no credit. Doesn't matter if I'm 18 or I'm 30. I have no credit and I go to get my first car loan. And when I go to get my first car loan, I make all my payments on time every month. My credit score does this over time. But if I go to get that first loan, that first credit card, student loans, whatever it is, when I embark upon that first line of credit, if I make my first payment, I'm so excited, I make it on time, I'm doing good, my credit score does this, but I miss a payment, so I lose 60 points, bring it current, don't get them all back, I make a couple payments, miss a payment, and your credit score is doing this. And it's going to go down over time. So everybody starts out with good credit. It's going to be dependent on what you do from that point is if it's going to go up or down. So that's good news because we can all start out somewhere in between and work our way up. So we talked about if you give them your name and your social and they run your credit, you lose 5 points for an inquiry because that's considered a hard pull and you are trying to open that line of credit. If I get declined, I still lose 5 points. If I actually get approved for that line of credit, I lose an additional 10 points. So if I open a new line of credit and I get approved for it, I lose 15 points. I do get those 15 points back in a year. And remember, we said your credit score is a reflection of the last 24 months, the last 2 years. So you lose those points and you do get them back. So it's not always so bad to lose 5 or 15 points, but it is important that we don't open 5 lines of credit in one day and then we lose, 15 times 5 or something like that. So I always tell people it's not that bad. You're going to get those points back. What's more important is that you're making those payments on time and keeping your credit card capacity at 30% or lower. These points will come back in entirety. These points will not come back in entirety. Here is a slide that kind of further breaks down that credit card capacity. We are going to add up the total limits on our revolving credit. We're going to add up the total balances on that revolving debt. Whatever we get is going to be our credit card capacity. And you lose a half a point for every percent of capacity gained or lost. And so that's why if you are at 30%, you still are going to lose 15 points. But if you're over 30%, you're going to lose way more points and you're not going to get them all back. So it is important for us to keep our credit card capacity low. Even though we lose some points being under 30%, FICO looks at it and they look at it like it's a healthy credit card capacity. So you're fine. These are the types of inquiries. So we talked about if you're going to get a job, right, that some of the employers are pulling your credit. If you're going to maybe get an apartment, they're pulling your credit. To get your utilities turned on, they're pulling your credit. Well, then I mentioned you lose 5 points every time somebody pulls your credit. So are you losing points when those potential employers pull your credit? No. Those are considered soft pulls, and you do not lose any points for your credit being pulled for utilities, for jobs, and things of that sort. But a card pull, when you're trying to open a line of credit, you do lose 5 points for that. There are 2 instances where you can shop around and you can have up to 10 inquiries within a 30-day period and you only lose those points once. And that's going to be for a car and a house. Because think about it, a house is a $100,000 purchase upward. So you do have the opportunity to shop around. You can go to 10 different lenders and get your credit pulled 10 times. As long as it's within a 30-day period, you only lose those 5 points once. Same thing with a car. So we get to shop around for large purchases, and that's good news. Involuntary inquiries, you get those letters in the mail and they say you're pre-approved for Amex credit card. Well, you didn't contact them, they contacted you. That is considered an involuntary inquiry and you don't lose any points for that. So you can just shred those if you want and throw them in the trash. This slide goes a little further into what hurts your credit, talking about that 35% with payment history. We talked about being 30 days late on a car payment, you lose 60 points. Bringing it current, you only get 40 back. With the mortgage, 30 days late, you lose anywhere from 90 to 120 points. Bring it current, you only get a portion of those points back. So I cannot stress how important it is to pay your bills on time every single time. That's what's going to make or break you, that payment history portion of our credit score. So how does it hit home for us? 2 different individuals go into the credit union and they're both wanting to buy a car. What's your name? Sosti? Sosti and I are both going to go into the credit union and we want to buy a car. Sosti's been doing pretty good with her credit, so she has a 700 credit score. I have a 600 credit score, right? We want the exact same vehicle. What kind of car do we want?
SUV?
An SUV? We may be able to afford a small, maybe like Toyota RAV4 or maybe a Nissan Rogue or something like that for $25,000. We can afford that. And so, what color do you like?
Gray.
Gray?
Yeah.
Okay. So we're going to get a gray, I'm going to say a Toyota RAV4. That's what we want. Sticker price on it's $25,000. Toyota isn't really budging on it, so that's how much we're going to have to pay for the car. She has a 700 credit score. I have a 600 credit score. We want to pay that car off in the same amount of time. We want to pay it off in 72 months. That's the longest you can do on a car loan, 6 years. And she has her interest rate of 3%. My interest rate, on the other hand, because I have a 600 credit score, is going to be 7.25%. So she's paying about $380 every month. I'm paying about $430. That's about a $50 difference. What do you think? Not too bad, paying an extra $50 a month?
I mean, that adds up.
That's exactly the point I always try to make. Because some people will say, $50, that's not too bad. $100 difference, that's not too bad. And I'm like, yeah, but $50
$3,600 difference.
for 72 months, that adds up. And when it's all said and done, her car was $25,000. She's going to pay about $27,350. That's not too bad. That's about $2,500 over what the car costs. In fact, a little less. My car costs $25,000 and I'm going to pay about $31,000. So I'm going to pay $6,000 over what the car costs. So we have the exact same car, literally the exact same make and model. We're going to pay it off in the same amount of time, but she's going to pay about $2,000 over what the car costs, and I'm going to pay $6,000 over what the car costs. These are real rates right now at the credit union. If I had a $599, we talked about losing 5 points for an inquiry, that not being too bad, you get it back in a year, 60 points for missing a payment. Sometimes 1 point difference could make or break you depending on that grading scale. Because if I would drop down to a $599, this 7.25 changes to about 9%. And instead of me paying $6,000 over what the car costs, I may pay $8 or $10 over what that vehicle costs. So when we talked about it in the beginning, that's why I was saying, ultimately it all comes back to your credit score is going to affect how much money you spend. And the more we take care of our credit score and take care of our financial responsibilities, the better we're going to be overall when it comes to our finances. You all are here to get an education and to move on to the next step of your lives, which is probably getting a job or doing something of that sort. And I want you to keep that money in your pocket. And so by making the right financial decisions now when it comes to paying our bills on time, making sure we're looking at those interest rates before we get credit cards, making sure we do not charge stuff we can't afford, because if we can't pay it off within a 30-day period, it might hurt us more than it would help us. It might be really, really fun spring break cheer, but then if it affects your credit score by 100 points, it may not be so good when you're trying to get that job in the next 6 months. So I did not put this in your booklet because I only want you to take it if you really want it or if you want to share it with someone. But I told you all that we offer this for our members, and even if you're not a member of the credit union, you can come into the credit union, you can tell them, I want to know my credit score, and I want a 6-month plan and a 1-year plan on how I can raise that credit score. And it's called a credit score analysis, and they're free. We have 4 locations, like I said, here in Beaumont, and 6 locations throughout Southeast Texas. So if you want one of these, you can take them. If you think you know somebody you need to give one to, then you definitely can pick up one of those. You don't even have to have this to go into the credit union and to get the credit score analysis. You can literally be like, hey, I was at Lamar, this lady came talking about credit score, and she said there's something you can do for me, and I can see my credit score and how to raise it, and that would be a credit score analysis. And so we do offer that at all of our branches, and I always tell people that it's definitely important for us to check our credit at least once a year. You as consumers are all able to check your credit once a year for free and not lose any points, and that's very important for us to do it. That way we know what our credit score is, we're aware of what's going on with our finances. Not only that, you know that everything on your credit report is yours. The average American checks their credit score once every 3 years. Majority of the identity theft and fraud cases we see, people come in, they have a credit card that's been opened in their name. It's been open for a year, 2 years, and they didn't even know because they're only checking their credit once every 3 years. So even if you have a free app on your phone like Credit Karma, y'all heard of Credit Karma? It is a good educational tool for you to have. You can go download Credit Karma every Monday. They send you your credit score, and they send you everything that's on your credit report as well. So at least you're just looking at it, making sure everything on there is you. In addition to that, you are every Monday getting your credit score, which I always like to tell people, Credit Karma is not 100% accurate, but it's a good range. When you pull all 3 of your credit reports from TransUnion, Equifax, and Experian, all 3 of them are going to be a little bit different. They're not going to be 100 points different, but they may be like 5 to 20 points different. I can pull TransUnion and I can have a 750. I can pull Equifax and I may have a 760. I can pull Experian and it may be 750, 760, and 770. And it's because all lenders report to the credit bureaus at different times of the month. And one thing I forgot to mention is, and I definitely like to tell people this, some lenders do not report to credit bureaus. All lenders are not required to report to the credit bureaus. But if it is a, I feel like, honest and credible lender, they will be reporting to the credit bureau. You'll know those places like those Instacart places, you see the commercial, they say it doesn't matter what your credit score is, no money down. We're giving a car to anybody who comes in. We'll definitely give you a vehicle. We'll put you in something today. I always say, yeah, they're going to give you a car, but at what cost? Some of those places literally have interest rates up to like 30% for a vehicle. They never report positive payment history to the credit bureau, but if you're late, I bet you they report negative payment history. In fact, I had a friend, I don't like to say dealership names because you never know who owns it or who works there, but I had a friend and she went to one of the Instacart credit places and she got a vehicle, and she had the vehicle for 4 years, right? And she paid off the vehicle, but in the 4 years she probably was late maybe 3 times, which is not bad, you know, late 3 times. So she goes to pay off the vehicle. Well, she went to this place because she already had a bad credit score, right? So it's kind of like a vicious cycle too. So now that she's paid off this car, I'm like, oh friend, come into the credit union and we want to pull your credit. And so now you may have a better credit score, you may be able to get a better vehicle at a cheaper rate, and I'm really going to be able to help you now that you've paid off this vehicle. So she comes into the credit union, we pull her credit score, literally no positive payment history reported from that company, but those 3 times she was late in the 4 years, that negative payment history was reported. So she is still in the same cycle because she has lost points during that 4 years. She's not gained any positive payment history. And so when she goes to get her next vehicle, where is she going to have to go? Probably to another place like that, paying 30% on a Nissan Altima and paying probably 15 grand over what the car costs. So it is very important that if you're dealing with a lender, you want them to report to the credit bureau that you're making those positive payments every month, because if they're not, it's not helping your credit score. You had a question?
Oh, I was just asking, like when you're paying off credit cards, is it better to, let's say because it's tax season, you get a big chunk in, do you want to pay off the small ones with high interest rates or the large ones with low interest rates?
Just depends. It depends on how much you owe overall on those small ones with big interest rates. Are we talking about hundreds or are we talking about thousands? I always tell people there's kind of a difference. I have seen people literally pay off a credit card in full, and then we use that credit card to pay off all the debt, and then they are paying back one debt source, and it's at the smallest interest rate possible. You see what I'm saying? So you can go get a credit card anywhere. I'm sure even y'all get letters in the mail, and maybe sometimes people come on campus. I think that may be legal now. When I was in college, they used to set up all around the set, and it would be like, get a free pizza, sign up for a credit card. So I was always hungry. I definitely was like, I'll take a credit card for a free pizza, and they would get the guys too, because they would be like, you know, sign up for a credit card and you get a $50 gift card to Foot Locker. And then they had some new Nikes coming out that week, and everybody signing up for a credit card. So I think it's illegal for them to do that now, but they used to do that, set up around the perimeters of the set when I was in school. And the credit card companies, it's so sad to say it, and it's very true, they target the age demographics of 18 to 25-year-olds because they think you're young and irresponsible with your money and they want to make money off of you. And if I can get you to sign up for a credit card and I know you're going to charge, you know, every week at the mall and you're not going to pay it back in full, then you're the customer I want. And that's how those credit card companies function, and that's how they thrive. So it is better to get your first credit card with your financial institution. Doesn't matter if it's a bank or a credit union. I will tell you this, I don't know if y'all know this, banks max out at 28% when it comes to interest rates. Credit unions max out at 18% when it comes to interest rates. And it's not because we're so great, it's just that's just how it's federally regulated. So you kind of always get a better rate at a credit union, but I don't push any products or services, so you go wherever you want. I just know if you're going to get a credit card, I would hate for you to go to Dillard's and pay 40%, and if you have a spare, you know, flat tire or something, you can't go buy a new tire with your Dillard's card. But if you have a primary, you know, credit card with your financial institution, you get hungry, you can go buy food. If you want to go to Dillard's, you can go buy something at Dillard's and so forth. So I just always tell people online, it's best to get your first credit card at a financial institution where they're not just taking orders. They're going to make sure they kind of give you a little bit of education and tell you to do what's best for you in your circumstance. So if you come up to me afterwards a little bit, and we'll talk a little bit more about that, I'll probably be able to answer questions better. Do you guys learn something you didn't know before you came in today? Yes? My friend back here, what's the highest credit score you can have? Don't look behind you, I'm talking to you.
850.
I was talking to him in the shirt, in the bright shirt. 850. I think everybody up there said it, so everybody gets a t-shirt after that. What's the lowest credit score you guys can have? 300. 300 being the lowest, 850 being the highest. What is the largest portion of your credit score, being 35%? Payment history. What's the second largest portion? I heard you first. You want to have a t-shirt? Hat.